Hello again, welcome to this channel. My name is CryptoKeep, and today I want to discuss how we can trade market structure with supply and demand. This is not a supply and demand introductory lesson, and it is not a focus on supply and demand, but a continuation of the market structure class we did recently. If you haven't taken the market structure lessons on the 3-part video, I strongly suggest that you do watch them now before continuing with this one. So I will be using this chart of USDT to analyze how we can trade market structure with supply and demand. Remember, in our last lesson, I said market structure is a series of higher highs and lower lows. Series of higher highs and higher lows, or series of lower lows and lower highs, like this. Or in time of a downtrend, like this. So let's not forget that, as it will be very useful here. So looking at this particular chart, what can we see? I can see a low here, and I'm seeing a high here, and here this looks like an higher low, and this looks like a lower high. So looking at this, coming from this side to this lower high, what do we expect naturally? We expect something like this to happen. Something like this, right? Coming for a lower low to this low. Okay, bearing that in mind, let's see what happens. And from this side we can see that it's plainly a lower high to this side. But remember, I said I want to see the correctional wave make at least 50% of the range before I take it that this side is a swing guy. So let's do that right now. As we can see, this already make the 50% range of this swing. So personally, I will believe the high is not here in, except this wave comes down and touch the 50% range before continuing back up. It can also go lower than the 50% range because this is the low to break for this market structure to go bearish. So let's see what happens in the next range of candles. Bear in mind, this is the current low, which is not the value low. We can have A, B, C like this, from the high to the first low, like this. We can have something like this, and then we start seeing wave back up. So let's see what happens. Okay, now we have this very candle breaking this lower high here, even closing above it. Now we can see ABC of this wave here, this side to this low. We can see have ABC of the wave, like in this, like we have here, like this, A, B, C. In as much as it's making a low to this side, but if it comes higher than this side, then it's a shift in market structure. Not fully a shift in market structure because the high is not here in, but a continuation to set the high for this swing from this low up to the next side. So let's see what happens. Okay, now we have just a bit, I don't know if you can actually see this, but we have, this is a high, this yellow line. Let me make it a bit bold. Okay, so now we can see this red candle just goes a bit above it. That means this high has a new high. That means this from here to this place is a new high. This high now has been tripped. So like I said, the high is not in since this low didn't make the 50% of the range. Hopefully from here we can get a 50% of the range. So let's see what happens on the next candle. But disregarding this information on the left, all this information, disregarding all this information on the left. Let me make a vertical roll. Let me make a ticker. Okay. Disregarding all the information to the left of this blue line, we have a market structure. I don't know if you can see it. We have this here. We have this. So you see there is a market structure in this already. And what does this tell us? Bullish structure. But if we are to disregard the information of this left, that is when we will take this to be. And that is what I want us to talk about. Now, look at something here. Here we have a supply. Here we have a supply. Let's mark it like that. That is a supply. We have the price coming to it and rejecting. Then we have the price coming into it. Now, we have two things here. This very highs and this supply. Now, this highs has been tripped by this candle, which means shift the market structure to the upside or continuation to the upside. And this supply has been broken because of these candles going way above it. Either it's a stomp point or bull trap, it has been broken. But closing of this candle inside it means we're likely to have a retracement from here. If it has closed above, we might get a continuation to the upside. But then in supply and demand, we want to see the candle that breaks the high as our demand. So this is a candle. Let me move this to the left. I mean to the right, not to obstruct. So the last candle that breaks market structure, like I said, disregarding this information on the left of this blue candle, we have a market structure here. We have this low, we have this highs, then we have this low, then we have this new higher highs to this. Okay, so we have this low to this high, to this low, to this higher high. And this is a pivot high, a 3 candle setup. This is a candle making a high, a candle making an higher high to this side, then on the side of it, on the right hand side, a candle having a lower high. So this is a pivot high. This green candle broke this pivot high, and this is the last red candle to do that. It broke this high, which is a mini structure. Then it has taken out this supply. That means this becomes a valid demand. This becomes a valid demand, and when price comes back into it, we want to treat it for a continuation to the upside. So let's see what happens. Okay, now we have this candle coming into it, tripping right down into it, then closing just above it. That is enough bullish signal for some people to take a long on this trade, while others want to see confirmation on lower time frames. But let's continue. Okay, we have now a green candle. Good. Now, what do you see here again? Disregarding this information to the left and focusing just on this. Focusing just on this information here right now. What do we have? We have this low, making this high, making this low to this high, back to this low. Remember I said I want to see 50% of the range. So let me take the Fibonacci. I will draw from this low to this side. Okay, it did make the 50% come back. That means this is a valid swing high. This is not a valid swing low. And then from this swing low, we have a higher high to this high. I want to see if the retracement is up to 50% on the new swing. Here is a 50% level. It came back into it, deep into it. They didn't break this low. If this candle had come back to trip this low, then it will have been changing market structure to the downside. For this information on the right hand side of this candle, disregarding the left hand side. Then now we have this high broken again to an higher high. So this structure keeps coming back where low to an high, higher low, higher high. Then here again, low to an high, higher low. Now we have the higher highs. So I want to see, okay, we've checked the Fibonacci of this range, we've checked the Fibonacci of this range as well. Then I want to see the Fibonacci of this range and see where it should come to before taking it as a low. But bear in mind, for this low, higher low to have led to an higher high of this becomes our low to break, right? Let me mark the low to break. That means if this low gets broken, the market is shifting to the downside. And also this low is interesting. Why? Because it's inside of a demand zone. This is a demand zone. Price has come to it and bounced, and it led to an higher high, which means this low is a very interesting low, right? Now we also have another thing. This is a pivot tie. Let me remove this. Okay, let me remove this side and leave the demand, the supply me. So this is a pivot tie. Why? Because this candle has the highest high flanked on the two sides by a lower highs. And for this pivot tie to have broken up, it means this last candle breaking the highs is also a demand. So let me mark it as a demand. Whatever point I mark it to is not important for now, just for illustration. So that is a demand. This demand now has fully broken with a close above of the supply. Let's see what happens. Okay, now we are coming down. Let's see if the demand we hold. It seems we get front round. It didn't touch the demand except to use the highs. If you use the highs of this demand, let me draw this one to the point it was broken so you can see clearly. If you use the highs of the last red candle, then you might have been in the other. But if you use the body, then you will have missed the trade. But then let's see what happens. Okay, we have checked this low to this side, the Fibonacci. Okay, we are expecting this low now. We have a new highs. It didn't get to the 50% mark, so the high is not here. Then we draw it here. We are expecting it to come back to the minimum of this range, which is at 69.85. Okay, it's coming. Now, what do we see, guys? Taking the Fibonacci from this low to this highest high, we see it has made the 50% range. That means this now is a valid swing high for this low. This swing low to this swing high, this is a valid swing high. This can be the bottom if it goes back up. So let's see what happens. Don't forget, this is a low to break. Once this low breaks, there is shift in market structure for this mini structure, not regarding this on the left. And looking at this on the left, remember this didn't make the 50% of this swing from this low to this side, and we decided to take it up. Let's see, that will be our larger time frame. It didn't make the 50%, so we take it up, and we want to see this swing come to at least 50% of this range to complete our swing. 0 to 1, then 1 to 2, then continuation of the bullish structure on the bigger time frame. But on this mini time frame, like I will say, let's see what happens. Now it's back to the demand. If you use this high, the high of the red candle, you will have been in this trade. You could have taken profit here, but if you aren't there now, this is another chance. Hopefully, let's see what happens. Okay, now notice something. We have this side broken. Oh, sorry, I don't know why this thing is not selecting. Okay, we have this high broken, and checking this swing from this low to this side, it has made 50% of this level, right? And now we have an higher high to this side. So we still have this formation in place from this level to this level, then to this level, now to this level. Even though the closing of this candle is not that good, but it still made an higher high. And for it to make an higher high, that means there is still bullish continuation, or the structure has also broken to the upside, which means this last red candle is likely to be a demand. It is a demand, but if it is a good demand or a bad demand, is what this thing is telling us. Having this candle close above this side will show that it is a strong demand, but having it close just below this side means it is not a strong demand, because we want something with strength. We want a fast move away, and we are not getting that. We are getting this because sellers are pushing the price back down, which means maybe on a lower time frame there is a supply or resistance at these highs, but it still made an higher high, right? So let's see what happens next. Okay, we get even an higher high again to this very high, but what happened again? It closed back inside of it, just below the last high, coming from the lower high, I mean the higher low. So what is this telling us? It's telling us that personally I wouldn't take a trade on this demand, because two candles now have gone be above this size and has closed back inside, telling me there is no more demand, or there is weak demand at this level, or sellers are taking over from this level. The market is finding it hard to go higher. Like when this high broke with this little broke, the next time it comes back above it, it close strongly above it. But here we have it breaking this size, finding it hard to close above it, then taking a second attempt and still finding it hard to close above it. That is showing that this demand should not be a demand to trade. But let's see what happens. But nonetheless, we still have an higher high, right, to this side from this low. Let's take a Fibonacci and see the structure, if it will make the 50%. It's not yet there, so we check again. Okay, let's take the Fibonacci again from this low. This is the low to break now. Before that, let me quickly move this. This is a low to break, because this is the last low, the last lower high. Oh, sorry, the last higher low leading to an higher high. This is an higher high to this. Either it closes above it or not. It is an higher high, but not a good one. So this is a, now let me move this to this side now. That is the last high we have, and this is the last low we have. So the Fibonacci, I want to see 50% retracement, if it's going to continue to the upside or not. Now we have it. From this side, we have this 50% retracement, which means this is a high. The high is in. Now this is a low to watch for a change in market structure if this market is to go down. Now let's see what happens. Like I said, this demand is not a strong demand. Now we have a long wick inside, just closing on the tip of it. Either it will hold or not. Let's see. Okay, it seems to be holding for now. Let's see if it go higher. No, it didn't. Now the demand has been broken. As you can see, the demand, this is a low of the demand. The demand has been tripped. And for this demand to be tripped, it means there is a supply above. And where is the supply we rule? The last green candle to break a demand is a supply. Likewise, the last red candle to break a supply is a demand. In case of a strong move, there are many filters to that. When we get to the supply and demand lessons, you will understand better. But for now, this will be the This will be the supply, because this is the last up candle that takes out the demand. This demand is now out. Now we have a supply in place, and for us to have a supply in place, that means the market may be shifting to the downside. They're looking at this, that this candle couldn't close above this side. It's an early warning that the market is probably shifting to the downside. Then supply taking out demand is another warning that the market is likely shifting to the downside. Now the confirmation to confirm that we are truly shifting to the downside is this low when we talk of market structure. And then this low is just inside another demand, but this demand has been tested once. As we know, the first test of a demand is the best. So let's see what happens. Wow. Now, this demand also is taken out by the same supply. And not just that, this low is also taken out by the same supply. Seeing this low breaks, what is happening now? We have something like this. We have something like this. This low is this low. This side is this side. This low is this low. This side is this side. Now we have something like this happening. Coming from this side to break this low. Coming from this side to break this low. And once we see this, for this low to break, that means we have a shift in market structure, right? But then there is a demand there. Maybe this demand we hold. This is the second test of this demand again. May we expect a retest of this supply. It may happen now, it may not happen. But for the fact that this low has been broken, we have a shift to the downside in market structure. So let's take a fib from this side to this current low. We want to see it retrace at least to this point, this 50% point, that's 73 price line, to confirm the correction or organic pullback of this wave. Now let's see what happens. Okay, coming to the upside now. Now we have a retest of this supply. Some people will actually use the lower wick to enter. Some will wait on the candle. But using the candle, I think it's just got front run. Yes, it missed by just a bit. But let's continue and see what happens. This low has been broken now. This is a high. Now, like I said, we want to see the organic pullback to the 50% range of Fibonacci. Now we have it. Now, is this the low now? For this to be the low, we get a rejection here. What do we expect? We expect something like this to happen. From this side to this low. Now, could this be our higher low? Or, sorry, lower high? Then what do we expect? We expect a lower low to this. Let's see if we get that. Not yet. Not yet. Still ranging. Not yet. Now we get a full test of this supply. And then it's still not going up above it. This is the high to break to continue to the upside. This will be the high to break if we get a lower low to this. So let's see what happens. Seems it's going down. Okay, now we have this structure completed. We have this structure completed from this side to this low. Now this is the lower highs. Now this is the lower low. It's lower than this low, right? That means we have taken our full bearish structure. But then there is one thing. This is still a demand, right? That is holding. This demand has been taken out by this supply. Let me remove it. This demand has also been taken out. Let me remove it. So we have this supply in place. This is no longer the low to break. This is the continuation low to the downside, which has been broken. This now becomes still the low. Then this becomes the high to break for a shift in market structure to the upside. And this side is also inside a supply zone. So let's see what happens next. Now this still becomes our low. Okay, taking back our Fibonacci, we want to see the organic growth, right? Not to fall more in on some pumps and down. We want to see an organic retracement to the 50%, minimum 50% range. We still haven't seen it, so probably this market is still trading lower. Let me move this to the left hand side. And let's play this. Wow. Wow. This demand has been fully taken out. Like I said, any up candle, the last up candle taking out a demand is a supply, right? That means this candle becomes a supply. Sorry. We have another supply there. Also, there is a strong move away from it. Now, this low keeps continuing. Our 50% level would have changed from the high to the low. We expect price to come back here, which is just a bit away from the supply, and continuation to the downside. Okay, let's see what happens. Now for that this demand is taken out, I think I can remove it. Not too close at the chart. Okay, now we get a test of this supply. It closed just a bit below it for 5%, but using Fibonacci, is it up to 50% retracement of this swing? Oh yes, it is. That means, what do we expect from this point? We expect something like this to happen, right? We have our high here, we have the low here, now we have higher, lower high. We expect a lower low to this low. Let's see if we get it. If we fail to get that, early indication of a correction, I mean of a reversal, right? Okay, there is one thing I quickly noticed. Use of trend line. If we roll from this bottom like this, can this be said to be the last side that breaks the trend line? This is not a private trend line. Let me use ray. From this low and this low. Okay, can this be said to be the this can be said to be the last candle that broke the trend line, right? But the trend line didn't really break until this point. Those are some features we'll talk about later. Now look at another thing here. We have from this side coming like this. This is another downtrend line, right? Our trend line resistance. Now we have 50% of this swing here. We expect it to go lower. If it fails to give that early indication of something, right? Now this is something. This supply has been broken. And what did I say by supply? The last candle that breaks a supply, the last red candle that breaks a supply is a demand. But this, looking at this red candle, this is not a quality demand. Why? Because there is no strong move from this area. See the long wicks. This is a good move, but with a long bottom wick, then the candle even breaking the supply, closing just right under it is not so good. But nonetheless, good or not, it's still a demand, right? So let's mark it as a demand. The supply has been taken out, this supply is still intact. Let's see what happens. We come back into it. Reacting where? A pushback. Now we get a tiny close above it. Let's see what happens. Oh, it's completed. Oh, that means the chart is too short. Okay, so that is what we want to see for supply and demand trading with market structure. But then looking at the now this trend line is even broken. Now there are many rules of supply and demand. We have a sun taking out a sun, either a candle taking out the supply, which becomes a demand, or a green candle taking out the demand, which becomes the supply, or a last we're taking out the trend line. This trend has been completely broken on this time frame because this did not interact with the trend line. Then we have another candle and not interacting with the trend line, which means this green boss, this red boss here, this first candle, is also a demand. This demand has aired. Nonetheless, that is not a good one, but it broke a supply. It has said now we have a break of this downtrend line, and we want to see what will happen at this supply. Either it will push back, Remember, from this high to this low, we could have something like this. We can have something like this. From this side to this, we can have something like this. A, B, C. Right. Then a continuation to the downside. But if this side breaks, either on C like this, either on C, if this side breaks, then that means the market has turned right. Then what do we expect? We expect something like this will then be from here to here, probably 1, then maybe to this demand 2, up 3, 4, and 5, like that. I hope you understand. But then looking at this whole scenario, let's see if we now have the 50% organic correction of this move to this side. Oh yes, we have it here. And what do we expect on this total move? We expect this. This will then be 1, 2, right? And we expect 3 to be somewhere above. So let me quickly remove this not to cluster the chart. So we expected something 3 to be above. Then 4 and 5, like that. This is the bigger picture, right? From this to this place to this is 50% level. Then we expect it to go higher, come back again and go higher. This is the bigger picture. And what we have done today is learning a mining structure within a bigger structure. So I hope you understand this little course, and if there is any other question either on supply and demand or market structure, I will be gladly willing to answer. Please do not hesitate to comment, like, and share this video for more great content to come in the future. Thank you very much.